Markets are currently closed, but the story for Strive Inc., ticker ASST, is boiling over. As of the closing bell on Friday, October 24, 2025, the stock finished the session at $1.10. That was a massive surge of over 27% in a single day. But the action didn't stop there. In after-hours trading, it whipped even higher, closing the extended session at $1.24, tacking on another 12.7%. This isn't just noise. This is the market reacting violently to a company that many had written off, a company that has fundamentally changed its entire identity. If you looked at this stock a few weeks ago, you probably saw a sub-dollar microcap and, like many, dismissed it. The expectation was that this was just another nameplate, another corporate shell bouncing around the bottom. But the reality is that ASST has just completed one of the most aggressive corporate pivots we've seen in years, transforming itself from a digital marketing firm into what it calls the first publicly traded asset management Bitcoin treasury company. What you're seeing isn't a random pump, it's a frantic, high-volume attempt by the market to reprice a company that has just strapped a rocket engine to its back, and nobody is quite sure if it's heading for the moon or going to explode on the launch pad. Let's establish the common ground here, because the skepticism is warranted. Most investors, especially those managing their own portfolios through platforms like Fidelity, Robinhood, or SoFi, are trained to see a stock chart like ASXT's and run the other way. You see a stock that traded for literal pennies in the 30 to 90-cent range for most of the year. You see a 52-week high of over $13, which screams pump and dump. You see an SEC filing from just a couple of weeks ago, on October 10th, revealing plans to register 1.28 billion new shares, and you rightly think dilution. That filing sent the stock crashing 32% in after-hours trading. So, the prevailing belief, the expectation, is that this is a company flooding the market with paper, a dangerous place for retail capital, and a world away from the relative safety of, say, Schwab Intelligent Portfolios or broad fidelity ETFs. This is not an investment for the faint of heart. This is speculation. But here is where that expectation collides with a very different reality. The company isn't just diluting to keep the lights on, it's diluting with a very specific, aggressive purpose: to acquire Bitcoin. The reality of Strive Inc. today is that it is no longer the company it was 6 months ago. The entire mission has changed. This isn't about digital marketing anymore. The company's stated goal is to increase Bitcoin per share over time, and it's using its equity as a weapon to do it. That 27% rally on Friday wasn't an accident. It was a delayed reaction to a flurry of massive company-altering news. Just last week, ASST announced an all-stock merger with Semler Scientific, a deal valued at $1.34 billion. This move alone adds 5,816 Bitcoin to Strive's treasury, bringing their combined holdings to nearly 11,000 BTC. At current prices, that's a vault worth over $675 million. This isn't a company buying a few coins on an exchange. This is a corporate-level acquisition spree. They also just acquired MSTR True North Inc., a Bitcoin media platform, and appointed its founder as their new chief risk officer. This is a complete strategic overhaul. They are signaling to the market that they are not just a passive holder of Bitcoin, like some other companies. They are positioning themselves as an alpha-generating Bitcoin acquisition platform. They believe they can use their structure to acquire Bitcoin-linked assets at a discount, essentially beating the market and, in their words, outperforming Bitcoin itself. This is the tension at the heart of ASST. The market is weighing two opposing forces. On one side, you have the terrifying specter of dilution. That 1.28 billion share filing is real. For anyone holding the stock in a Fidelity brokerage or Robinhood app account, this is a massive risk. It's the primary reason the stock got hammered down from its highs. But on the other side, you have a management team led by CEO Matt Cole that that is executing a high-stakes, high-speed plan. They already raised $750 million back in May, specifically to buy Bitcoin, and they did it through equity, avoiding debt. Now they are merging and acquiring their way to a larger treasury. The $1.34 billion valuation for the Semler deal, a 210% premium over its trading price, shows they are willing to pay up to consolidate these assets. The volatility you're seeing is the direct result of this battle. When the dilution news hits, the stock collapses. When the acquisition and BTC holding news hits, the stock explodes. Friday's 27% jump on staggering volume of 247 million shares against an average of just 23 million shows the bulls won that day's battle. People are realizing that the company's market cap at certain points has dipped below the actual value of the Bitcoin it holds. That's a classic value signal, suggesting the market is pricing in the dilution, but not the assets. Let's step back and look at the business model itself. What is a Bitcoin treasury company? Essentially, ASST is trying to be a corporate vehicle for Bitcoin exposure. For many, this might seem redundant. Why not just buy Bitcoin directly through Robinhood Crypto or another platform? The argument from Strive is that they can add value. They are not just buying and holding. Their strategy, as they've laid it out, involves complex acquisitions like distressed biotech takeovers or settling old Mt. Gox claims, all with the goal of acquiring BTC-linked assets for less than their market value. This makes them fundamentally different from an Nvidia stock, which produces a physical product, or an Apple stock, which has a services and hardware ecosystem. ASST is a bet on two things: the future price of Bitcoin and the ability of this specific management team to execute this alpha-generating strategy effectively. It's an aggressive play. It's a bet that they can acquire Bitcoin faster than they dilute the share count, thus increasing the Bitcoin per share. This is a high-wire act with no safety net. This is why you won't see ASST in many Fidelity mutual funds or highlighted by Fidelity Wealth Management advisors anytime soon. This is the wild west of the market. It's a stock that trades with 4 to 5 times the volatility of Bitcoin itself. A 5% move in Bitcoin could easily trigger a 20 or 25% move in ASST. For traders using platforms like Interactive Brokers, which are built for high-speed, volatile markets, this is a target-rich environment. For a self-investing individual looking to build long-term wealth, this is a very different kind of proposition. The company is brand new to this strategy. It originated from the anti-ESG asset manager Strive Asset Management, but this publicly traded entity, ASST, has now completely pivoted. There is no long-term track record for this specific Bitcoin treasury strategy. There is no Wall Street coverage. There are no consensus price targets. You are flying blind, guided only by the company's press releases and the raw sentiment of the market. This is what makes it so compelling and so dangerous. It's a pure expression of market forces trying to price a completely new idea. So, what's the future outlook? This is where the expectation versus reality framework becomes critical. The short-term expectation is for more gut-wrenching volatility. The stock is now firmly on the radar of every high-frequency trader and retail speculator. Any news about Bitcoin, any new SEC filing from the company, or any new acquisition announcement will send this stock flying or diving. The risk of a capital raise is ever present. That 1.28 billion share shelf registration is sitting there, and the company will almost certainly use it to fund its operations and acquisitions. This will create a constant downward pressure, a headwind that the company's strategy must overcome. If you're using the Fidelity mobile app to check your individual brokerage account, you could see your position swing 30% in a day. You have to be prepared for that. The long-term reality, however, could be one of two extremes. In the bull case scenario, Strive's management proves to be brilliant. They successfully unlock Bitcoin from distressed assets, their mergers are accretive, and they rapidly grow their Bitcoin per share metric. As Bitcoin's own price appreciates into the next cycle, ASST acts as a leveraged bet on that appreciation. In this scenario, the stock doesn't just follow Bitcoin, it dramatically outperforms it. It would vindicate the entire strategy, and the $1.10 price tag would look like an absurd bargain in hindsight. Investors who got in now, perhaps through SoFi Invest or other investing sites, would be rewarded for taking on that massive early risk. This is the narrative the company is selling. In the bear case scenario, the reality is that the strategy is flawed. The acquisitions are too costly, the premiums are too high, and the alpha they claim to be generating is just an illusion. The dilution from the constant share issuance overwhelms any gains in the Bitcoin treasury. Management fails to execute, and the company becomes a falling knife, a black hole for capital. The stock drifts back to its sub-dollar levels and eventually fades into obscurity, a footnote in the history of corporate crypto pivots. This is the risk. It's a binary outcome. It's not like Tesla stock, where you can debate vehicle margins and FSD adoption. It's not